Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're talking about something which is way overdue, and that is HITI's recent acquisition of NuLeaf and exactly what this means for investors and what can be expected in the coming months. Now I'm really sorry this has taken me so long to get around to talking about and get uploaded. I know I say this a lot, but my actual full-time investing job has seen me work 120-hour weeks back to back for around 6 weeks, and it just leaves very little time whatsoever for anything at all. I do really appreciate all of those emails I had reaching out to me and worried whether I'd lost interest and checking I was okay. I certainly haven't lost interest, all is good, just bear with me. Now, before we dive into the details of this deal, I actually want to start off by saying that this is perhaps my favourite deal that HITI has done to date. Not only does the deal itself massively complement HITI's existing offering, but the strategic rationale behind the transaction is also pretty compelling and also adds a massive amount of synergy potential within a number of HITI's other recently acquired companies. Before we get into it, please smash the like button. It's so helpful in supporting the channel, which isn't a favourite with the YouTube algorithm, especially thanks to the highly unpredictable upload schedule on this channel and our lack of clickbait. It's massively appreciated, so please keep it up. If you're new to the channel, then make sure you're subscribed. And as always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So a couple of weeks back now, on November 22nd, HITI announced the acquisition of NuLeaf, a US-based producer and distributor of CBD wellness products. For the 12 months ending September 21, it generated sales of just less than $20 million and EBITDA of around $5.3 million. Now we will come on to the specific details around the financials shortly, but this is clearly a decent EBITDA margin, but still one which can be improved with the acquisition by HITI. NuLeaf is based in Denver and was founded in 2014 and has its own CGMP certified manufacturing facility and is able to manufacture a range of formulations and technologies, for example vegan soft gels, CBG, CBN, and products that many other competitors cannot, which command higher margins. It has 330,000 unique customers and over the last 12 months has achieved 5.1 million website views. Its average order value from customers is around $120. Now, in addition to these, NuLeaf also has a relationship with Sprout Farmers Markets that currently have NuLeaf products stocked in 33 of its stores. But following a positive initial period and initial trial, this is now being expanded to 268 stores nationwide. Now, clearly there's a massive strategic rationale here. Not only can NuLeaf products be sold across the HITI platforms and the other HITI products be distributed across the NuLeaf website and potentially through Sprout Farmers Markets, the impressive manufacturing capabilities which NuLeaf has can be leveraged to create significant financial benefit for the company. For those already familiar with HITI, you'll clearly be aware of the other recent CBD related acquisitions the company has made, Fab CBD and Blessed CBD being examples of these. Now, while both of these deals were great, what the addition of the NuLeaf brand and manufacturing capabilities does is create the potential for significantly more synergies and greater margin expansion within both NuLeaf, but also those acquired businesses themselves. NuLeaf's manufacturing facility presents a strong opportunity to leverage this to the benefit of Fab CBD and Blessed CBD. By consolidating manufacturing in one facility, not only are you able to get greater efficiencies, which translate into stronger gross profit margins, you can also ensure optimal factory capacity, drive greater economies of scale, and achieve greater purchasing power. So this does present a very real opportunity to drive greater gross profit margins and exceed the current estimates that are held by analysts. Adding to this, the overhead cost efficiencies which can be generated and recognised, there's almost the ability to directly translate your gross profit directly into EBITDA by leveraging the capabilities within the HITI group. To put more colour around this, what I mean is that you don't need a marketing function within each business unit. You don't need an accounting and finance function within each business unit, and you don't need HR. All of these functions, which all these acquired businesses will have, which is why there is a difference between gross profit and EBITDA, can be eliminated, and the services provided by those existing functions within a HITI could be centralised, and which then generate significant synergy potential. Furthermore, the NuLeaf acquisition further cements HITI's position in the CBD and wellness product category too. Don't underestimate how important this can be in international markets where the cannabis legalisation agenda is further behind, but where there is definitely a receptiveness to CBD, the UK being a very good example of this. Now usually by this point in a video when we're talking about HITI's latest acquisition, we would have covered off the financial metrics, but there's so much to like about this one even before getting into that. Now I don't say this lightly, this is my favourite HITI deal to date. So HITI has paid just over $31 million for 80% of the company, with an option to acquire the remaining 20% on the same terms. The acquisition translates to a 7.1 times EBITDA multiple on a trailing 12-month basis. Now, we say this every time, but this is hugely accretive for the company and investors in the company. Just on this acquisition alone, significant shareholder value is being created. As a reminder, HITI is currently trading around 92 times EBITDA on a trailing 12-month basis. That's correct at the time of filming. What this means is that any acquisition made for any multiple lower than this 92 times is creating shareholder value through multiple arbitrage. The lower the multiple that's paid, the more accretive it is and the more value created through that multiple arbitrage. So what you can take from this is that this is a hugely accretive deal, it's great for the company, and that's before we even factor in all of the previously mentioned synergy opportunities. Now, the other really important dynamic to keep in mind here is the fact that this is an all-stock transaction. Said differently, the sellers of the company are accepting payment for their entire company in HITI stock, not cash. Now, this is important because rather than trying to get the maximum value for the company today, they clearly see the potential value of the combination of the two businesses and can see the real upside that this presents in the longer term. They're also staying on with the company in a consulting style role and will be unable to sell their shares until the very earliest 4 months from the transaction date. However, personally, I would expect them to hold their position for much longer. The reason I say this is because otherwise they would have just negotiated with Raj to have a cash component to their consideration paid today. Now, the final thing that is worth touching on here is what the analysts are saying about the acquisition. Clearly, since the uplisting, as we'd forecasted and discussed a lot on the channel, the analyst coverage for HITI has increased. Echelon, Roth Capital, ATB and Desjardins have all released the updates following the announcement, and all of them are positive on their views for the outlook of HITI and the news of the acquisition it's made. One analyst, however, does sit alone with a more bearish view on the company. That's Pablo Zuanic of Cantor Fitzgerald, who in general is more bearish on the company. Now, I have actually reached out to him to discuss some of these topics of debate in his initiating coverage report, but that is a whole topic of discussion for another video in itself. In summary, I'm a big fan of this acquisition, and I think the real financial benefits will become clearer to investors over the coming months. I think the Q2 earnings will likely give us the first signs of what potential this has, but don't expect the full potential to be outlined fully into the results for around 12 months. These synergies don't happen overnight. Moving manufacturing and driving efficiencies takes time. It's better to do it slowly and properly and right, rather than rush it and cause further problems down the line. Anyway, that's it for today. Thank you so much for watching. If you enjoyed the video, please smash the like button, subscribe for more investing related content, and check out the Patreon for other content in the private Discord. As always, please let me know your thoughts and comments in the comment section below. I love hearing all the different opinions and perspectives, so please get involved. Thanks again for watching, and I'll see you in another video.